We partner now with the FT to bring you Lex on Bloomberg. Basically, you get a sneak peek at the Financial Times' flagship column a day early. Paul Rathbone joins me now from London. He's been following BP's third quarter results. So, Paul, I mean, the company shares are soaring. The reasons behind that move?
Well, better than expected results this morning. Profits halved compared to the third quarter of last year. But just to put that in perspective, BP still makes about $100,000 by the time it takes you to fill your oil tank. On top of that, also, Chief Executive Tony Hayward has pledged to cut another $1 billion of costs out of the company on top of the $3 billion that he's already aimed for. And that, perhaps more than anything, is what spurred the 5% rally in BP share price this morning.
What is the importance of the cuts?
Well, the downturn has been a wake-up call, obviously, for the whole industry, and companies that had based their investor attraction on a high dividend whilst maintaining capex were suddenly having to cut their dividends. And Tony Hayward, the chief executive, wants BP to be cash flow neutral at about $60 a barrel. And it looks as though he's just about achieving that. In the third quarter of this year, when oil prices were about $63 a barrel, BP still brought in net $1 billion. So he's cushioning BP for the downturn, should one arise. And at the same time, should oil prices rise, as indeed your Bank of America analyst who's coming on later thinks they will, then BP will be rather well positioned to take advantage of that too.
We do thank you, Paul. That's Paul Rathbone. He is the FT Lex deputy editor.